And the Forex major is trading right now. Look like this: 114.32 dollar yen at the moment. We did see the 113 mark being hit as the weaker dollar continues to be a story. Euro dollar 143.19 currently. Let's get more with Stephen Rowles. He's an analyst at CFC Seymour. Stephen, we got the Fed meeting coming up next week. Not only are many now expecting a rate cut, but the discussion seems to have moved from to cut or not to cut to 25 or 50. What do you think?
Yeah, it is kind of strange how we've moved so quickly, especially after the Merrill Lynch report earlier this week. But the markets has priced in 100% 25 basis point cut, and we're in agreement with that. And I think next week we get some data. We get the GDP data for the third quarter, which we expect to be above consensus. So we still see that personal spending is quite strong. And as well, next week, next Friday, we get the employment numbers, which we think will continue to be relatively strong. So we don't think that we'll see a 50 basis point cut. And as a result, we think we could see a bit of a rebound in the U.S. dollar next week.
What are the chances, Steve, of those employment numbers you're mentioning disappointing you and others in the market?
Well, it's going to be interesting to look at the numbers because, it's almost after last month's catastrophe with the numbers. We really have to look at the revision more than the actual numbers. But we still think that the economy is still strong. And looking at durable goods numbers yesterday, but we saw that they're still spending on capital equipment. So businesses are still expanding. We're seeing strong earnings out of Microsoft yesterday. So the sentiment is still strong on the equity side. So we think that overall the economy is not as bearish as some others in the market feel.
Okay, so you're expecting then stronger dollar next week. At these levels now, around 114, you would suggest people start adding on dollars?
Yeah, I think so. I think that we could see a bit of a rebound, strictly because of the markets, some considering that there's going to be a 50-point cut. So if there's a 25 cut, that will help bounce back the U.S. dollar next week.
Okay, then. Real quick, can we also talk about some of the Asian currencies? I mean,
sure.
We had those CPI numbers out from Japan today. The leading indicator, the Tokyo figure, doesn't seem to provide any kind of support for the BOJ in order to raise interest rates. Are we looking at a rate hike sometime maybe even in the second half of next year then?
Yeah, it's quite interesting how we keep on seeing these numbers and we keep on waiting for inflation to pick up, but the consumer is just not spending enough in Japan right now, so we keep on delaying these rate increases. So we don't expect to see a rate hike this year as we initially projected. So we do look for maybe towards the latter half of the first quarter, Japan will be in a position to increase rates. So continue the same old story with Japan, because their bank meets next week just before the Fed. So with the Fed cutting as well, it should trigger sentiment for Bank of Japan to remain on hold for a little bit longer here.
All right, Stephen, thanks so much for joining us today. That's
Okay,
Stephen Rowles,
thank you.
analyst at CFC Seymour. Have a good weekend.